Hello everybody, welcome to another one of my investing videos. My name is Mark, and in this video, just like clockwork, bought to close my weekly call option that I sold last week and sold to open another one. Let me show you the transaction that I did here. So there it is right there. Actually, let's look at this one first. This is the weekly that I sold. This was on November the 2nd. Today is November the 10th, and on November the 2nd I sold to open a $35.50 call, took in 56 minus commission, $48.29, and down here you can see I bought it back, bought to close it for $4.01, and so I took in a total profit of $44, and then I immediately sold to open another one, and this time I lowered the strike price down to $35. And let me show you what happened. I actually did this on Thursday, so let me go to my trusty charts here, tradingview.com. Let me put in Twitter here and bring up the chart, and let me show you what happened Thursday. Let me clear this out, and let's put in a 5-day chart. So there's a 5-day chart, and if we go to Thursday, today's actually Saturday, so that would have been the 8th. So you can see right here, right there, that's where it changed. So Twitter actually closed down kind of low. It went down to the 33s something. Actually, let me put in the 1 day, that way it'd be easier to see, easier for me and easier for you. And so here's 1 day. Now let me go ahead and do a little zoom in so that we can pull that up, and let's do right here. There we go. So these are all 1-day charts. Now we can look at the 8th of November. So there's the 8th, a big red candle right there. Let me close this thing out. Let me close this out. Let me zoom it in even more so we can see that even better. And there it is right there. So if I put in my little drawing tool, that red candle right there, that's what happened to Twitter. It closed, and actually you can look here, you can see that it closed down to $34.18, but it actually went lower. If you see the little skinny line, it went down to $33.87, and so that was on Thursday. And so that's why I did all of this, what you see right here. And so on Thursday this had dropped down to $4, and TD Ameritrade has a nice little bonus perk that when you sell calls or puts, you open them and you get some money, and then when you buy to close them, if the price of that call or put is less than $5, then they charge you free commission. So like right here you see $4, and there you see bought to close it for $4 and a penny, and the penny is because they still charge you like 70 cents a contract, but they don't charge you like the $6.95 commission when you buy to close. And so that's partly why I bought to close it. And another reason that I bought to close it is because when Twitter starts dropping, then the premium that you get, and let me go to back to Twitter here, and you can see, I'll show you what I mean. And let me go to the option chain, and if you look at these weeklies here, okay, notice right here is a 34, right there is a $34 call, $35 call, and notice how the premium gets smaller. And let me go to some out of the monies so you can see some higher strike prices. And so $36 calls, you can see you're only getting like $24, and if you factor in commission, which is I think it's $6, you're only making 18 bucks, right? So when I saw Twitter dropping, I thought, well, I better close it now and sell the $35 call while I can get something for it. So that's what I did, and it's totally safe. And the reason why it's safe for me, let me go back to my transactions and let me put in October and click the view, and right here, if you see that big number there, 767. That's when I bought a put option. Okay, the reason I bought that put option is because I first, and actually let me go back to September. This is really where the party got started. Back on September the 10th, I bought a $30 call. I spent $777, and then I'd been selling weekly calls like clockwork. And then eventually the price of Twitter had a really good earnings, and it went up a ton. And let me show you what happened to Twitter here. Here's a 3-month chart, and right here you can see, let me put in my drawing tool right there, you can see Walla Kazama. Twitter went all the way up from around the 28 to 29 all the way up to the low, like this would have been the gap right there. So it went up to about the $33 range, and so that's when I bought the put option, because I wasn't sure if Twitter was going to go back down to reality, because we live in a volatile market right now, and there's been lots of selling, and the market's been going down overall. And so I thought, well, is Twitter going to defy the laws of gravity and keep going up, or is it going to go back down? And I didn't know. And so I had a choice, okay, because when Twitter went up like that, then I was up big on my call. I was up about $200, almost $300. And if you look at my call right now, what it's worth, my $30 call here, you can see the bid. Let me go ahead and pull that up. The bid is $970, the ask is $10, so it's worth almost $1,000, right? And so when Twitter had the good earnings and it did all of this stuff, I wasn't sure if Twitter was going to keep going up or go back down. And so I had a choice, okay? I could have just closed the whole position out and made a nice $250 profit and called it a day, and then just kind of sat around wondering what I'm going to do with my money. Or I could have sold my $30 call and bought a higher call and then just done a reset. You know, I could have bought maybe a call option out to 2021 and sold weeklies on that. That was a second choice. The third choice I had was I could have just kept rolling up my calls. And I was nervous about all those things, because if Twitter did go back down there, then all the money, all the profits that I made on my call would have all went bye-bye out the window, and I would have been kicking myself in the head thinking, man, why did I do this? Why didn't I do a better job at keeping my profits? I've always been really good at cutting my losses, but I haven't been so hot at keeping profits. And so this time I thought, well, this time I'll buy a put option, and that'll make darn sure that I keep my profits. So that's what I did. Going back to my transactions here, and let me go back to October right there. And so right here is the put option that I bought. It was a $32 put, and I buy leaps, right? Expires in 2021, so that's 2 years from now, 2 years and like 2 months. And I spent $767 for that puppy dog. And then this call option that you see that I bought it back. This was a call option. It was a $30 call that I sold to open for $165, bought it back for $253. And so my $30 call, I was up big, and then I just waited. So notice that was on October the 26th, and notice that I didn't do anything. I just sat because I wasn't sure what Twitter was going to do. So for 4 days it took. Finally, Twitter decided to go up. It kept going up, and that's when I started selling more calls. And so I started very conservative. I sold a $35.50 call, took in 20 bucks, bought it back for $1, and just like clockwork, sold another one. And now here we are today, right now, watching this video. I bought that one back for $4, and now I'm selling a $35 call. And now back to my original point, it is totally safe because I made 20 plus 48, which is 68, plus this change here, so 68.58 minus 5, so $63 and what, 5 cents or something. We'll just say 63. We'll say $60. I made $60. So even though I'm buying closes $35.50 and I'm selling the open at $35, which is a loss of $50 in intrinsic value. If Twitter does decide to go above $35, because I took, even though I lost $50, I made $60. So that means if Twitter does go over $35, then I can finally safely sell to close my $30 call, which will be worth over $1,000, maybe even close to $1,100, and then I will do what I've been dreaming of doing, which is to open a butterfly put spread. So when that happens, and I'm really wanting Twitter to go over $35 in the next week, so that I can sell to close my $30 call right here, right there, this one right there. If Twitter goes up, right now Twitter is at let me check my trade view. Twitter is at $34.08 or something. Yeah, $34.08 is where it's at. So if Twitter goes over $35, then my call option that you see here will be worth somewhere in the $1,000 range. I spent $770 for that, so I'll make a nice $300 profit. I can take that $300 and deduct it from the cost of the put option that I bought, which was $767, bringing me down to $467, and then I will buy another put option. And right now the puts that I see, I of course will look at these long-term ones, these leap puts, and the puts that I see right now, the $35 put has a bid of $860 and ask of $945, so I might go in a little bit because I don't like big spreads like that. I like little spreads, like a bid of $835 and an ask of $850. That's way better for me. You know, I don't like these big distances of $860, $945. So I probably will not buy this leap here. I will probably buy this one here, which is January of 2020. And if Twitter does go over $35, then the value of this will probably drop down into the middle $600 ranges. So I'll probably spend about $650 for that put, and then I can start selling to open weekly put options, probably at the 34. Looking at the wrong side there. At the $33 or $34 level, and I can sell two of them because I will have two puts. And if Twitter does go back down, then because I own this $35 leap put, that will go up in value, and that makes it totally safe, and I will pay off the $32 put that I own fast as grease lightning. Again, I spent, let me go to back to my view here. I spent a total of $767 for a $32 put. So if I buy a $35 put, I can sell $33 puts. This $32 put will go up in value. I'm sorry, the $35 put will go up in value, and I can start rolling down my puts, and that way it takes money off the table. I will have an extra $1,000 in my pocketbook to play with and to leverage myself up and down as I will. So that's it for this video. If I'm talking too fast, please let me know. If you have any questions, feel free to leave any questions in the comments. And I jacked up the volume on my microphone, so hopefully the sound quality is a little bit easier to hear. Leave a comment about that if there's still a problem with the sound, and maybe I'll need to go out and buy a new microphone or something. So I hope you enjoyed this video. I hope that I'm giving you guys some really cool ideas on how to trade stock options, buying and selling options. And again, you don't need a lot of money to do this. If you watch my video back on September the 10th, I started with $2,430, but I feel you could start even with as little as $1,000 and you can get rocking on this stuff. So thank you for watching, and I will see you in the next video. Have a good day.